Benchmark crude slid to its lowest level in more than 2 years. Crude prices remain under pressure amid the virus threat and the fact that members of the OPEC Plus have not reached the agreement yet. Oil opened the day in the negative territory, with Brent having lost almost 2% of its value. The ruble is losing ground amid a sharp decline in oil quotes. Saudi Arabia has finally reached the deal with the OPEC on additional production cuts for the whole period of 2020 instead of the second quarter discussed earlier. However, Moscow, being one of the major partners, is still hesitating to support the agreement. On Friday, investors will keep a close eye on the meeting between energy ministers of Russia and Saudi Arabia. Oil prices may get significant support if all the members agree to back extra curbs on supply. However, the current stance of Moscow brings pessimism to the markets. Traders remain cautious and prefer to sell. Besides, any negative news from the coronavirus front may push oil prices even lower. Yesterday, Brent fell by more than 2% towards $49.99 per barrel. First time in 3 years, the benchmark crude has closed the session below $50 a barrel. On Friday, oil quotes continued to drift lower to the level of $48 a barrel. WTI futures edged down to $45.35 a barrel. Brent is very unlikely to rebound back to the level of $50 per barrel. Some experts believe that even a positive decision from OPEC will not be able to boost oil prices, as negative sentiment in the market outweighs hopes for additional supply curbs. Meanwhile, coronavirus is rapidly spreading beyond Asia. Over the past 3 days, almost 3,000 new confirmed cases have been reported. The ruble is seen to finish this week in the red zone following the drop in oil prices. The dollar-ruble pair has returned to the level of 67.50 amid overall risk aversion among investors. A steep decline in oil prices weighs on the ruble as well. However, in the early trade, the Russian currency edged slightly higher. It seems that the weakening ruble has become more attractive for foreign companies in Russia to carry out the settlements. Besides, traders could have taken short intraday positions on the ruble, hoping for a new OPEC Plus deal. In addition, the ruble is supported by a significant reduction in foreign exchange interventions introduced today by the Bank of Russia. Market liquidity may become lower ahead of the long weekend in Russia. This may influence the dollar-ruble pair trajectory on Friday. The pair's dynamics will mostly depend on the traders' sentiment during the holidays. That's all for now. Thanks for watching and stay tuned.